Hey there, beautiful traders. My name is Desmond Samuel, and I'm back with another episode of our weekly Forex Forecast. Now, if you're coming across this channel and you're wondering what this is about, so this is a segment on my YouTube channel that I've actually put aside every single weekend to come here to give you guys the best trading setups ahead of time, and then also to give you guys like a weekly breakdown and a review of every single trade report that we've had so far, the ones that have banged and the ones that are yet to bang and the ones that are en route to bang, if you know what I'm talking about. All right. So, and if you're coming across this video, I want to assume that you actually want to make money this Q4, this 2024 Q4. Matter of fact, a lot can change in 90 days. Best believe, all right? However, it won't change if you don't take action. So kudos to you for clicking on this video to watch. It shows that you've actually taken the very first important step. The next step is to watch through to the end and also know that the pairs and also shoot me an email and also come to my Telegram community to learn how we trade real time, all right? So without wasting any much time, and I urge you guys once again to watch to the end because I like to leave the best pair for the absolute last. You know how it is, man. So let's get into the business. So the first pair on my list now is the euro dollar. For this pair right now, this is headed this is headed past parity as far as I'm concerned, and it is headed into really major levels. I'm talking about this 1.2758 region, which actually sent the market back down at this point. You can see the momentum that it got around here and then just collapsed totally. Now, this is how things look, all right? Now, first things first, we do have an inverse of the Tudor's pattern here, which is the head, shoulder, shoulder. This was the neckline break and retest, and this is yet to retest to give us that second bounce of the level. You guys know that the first pullback never really does the trick as compared to the second or the third pullback, all right? So as far as I'm concerned here, we do have a chart pattern here, which is yet to be validated, all right? The market is yet to pull back into this bar right here for us to actually blow through the roof, all right? So as things stand here, we are actually going to need to create liquidity point, what I would call liquidity point. You know why I call it liquidity point? Because the actual major retest below is around 1.0900 region. However, if you look closely, the market keeps on giving you guys new demand levels. This is to trick you guys into thinking that, okay, fine, the market is going to actually come in here and then reverse. Now, all things being equal, the market will actually come in there and reverse. However, you also need to understand that when the market gives you a range like this is a range. When it gives you a chart pattern, it needs to pull back. All right, it needs to come in for a full retest. After the full retest is set and done and stamped, then we can start looking to go higher. All right. Now, once we scale down to let's see how things look on weekly time frame real quick. So from the weekly time frame, this is how things look in the perspective, right? Weekly time frame perspective here. We're coming into really major deciding points here for the euro, which happens to be right around 1.12322 region, this yellow bar right here. And this could pretty much send this pair back down into this bar, which is 1.0900 region. Now, however, as traders, I urge you guys to be reactive and not predictive. All right. So we are here to go with whatever the market presents. Any opportunity that it presents to us, we actually get to roll with that instead. All right. But however, from the technical analysis standpoint, we have a swing low here, and this is a swing high. And technically speaking, one of the characteristics of an uptrend is series of high highs and higher lows. And in this case, we've put in a higher low. If you look, this low is higher from this previous low. However, we've not had a decent pullback because, like this is an impulsive move. We've not had a decent pullback that can actually be equal to the half of this entire impulsive move. You guys know that whenever the market gives you an impulsive move, it has to retrace to at least 50% of the entire impulsive move. Now, if you do a measurement real quick from here to here, you can see that this pullback isn't even up to half of the entire impulsive move. So what do? We have to sit on our hands, especially now that the market is actually headed into 1.2758 region. So it is bound to slow down around this region. And you guys know that the Feds came in and then they cut interest rates and this sent the euro blowing through the roof. However, as things stand here, the ECB, they're actually going to cut their own interest rates as well. The UK government could actually come in also to cut their interest rates. So this would further cause this price, this euro dollar, and then the pound sterling to collapse and then give us that pullback that we actually have been waiting for. All right. So if you prorate it, you can see that this is from swing low all the way to swing higher. We have a decent demand level waiting to be validated on higher time frame, which happens to be the weekly time frame. All right. So in this case, I want you guys to do two things here. So you can see how things look. It looks a bit nasty on the daily time frame. So let's see how things look on the 4-hour time frame. And then also, guys, this is a trick whenever you see the market be a bit confusing on one particular time frame, I urge you guys to zoom out. All right. So say for instance that you're on the 4-hour time frame, and for some reason you can't seem to find the coordinates of the market. I urge you guys to zoom out a bit. Sometimes you need to see more to actually understand more. You feel me? So, and you can actually do this by going to the weekly time frame. Just look at how things are on a major big boy time frame. Then you can actually walk your way down and decide, okay, fine, what are you actually doing with this pair? So as things stand for this pair, I'm actually cautiously bullish on this guy because we do have levels to watch out for. However, we have this major bar right here that is yet to be tested. So what we could even see is a decent dip back down here. Once you see this dip around here, once the ECB cuts their interest rates, we could see this guy drop, collapse all the way to 1.0900 region. And then once this is all said and done and everything is balanced properly, I'll be here to let you guys know when this guy is due for us to actually get on another wave to the upside. Now, if you look at this closely, yeah, you can see that one of the ways to try and estimate by how many pips the market is bound to move after it has broken out is by measuring the total length of the range in here. So if you look at this guy closely, we have from this bottom of this low right about at 1.06012 here, and then just drag it up all the way here. Decent, yeah. So you can now come here and say, okay, fine. Once this retest is done here, we should even rally into this yellow bar right here, which is around 1.12500. You see the trick? So the key thing now is to actually wait patiently for this guy to pull back into this yellow bar right here, which is definitely going to happen somewhere along next week or next 2 weeks. It might take a while. However, whenever they cut their interest rates, this is bound to happen. Right? This is going to dip. And then we now actually start looking for buying opportunities all the way from here. Why? Because this is an inverse head and shoulders pattern. This is happening in an uptrend. Now, if you look closely here, the medium term of this particular pair right here, this euro dollar is actually an uptrend, all right? So this is how things look. Weekly time frame once again. So this is how it looks, all right? Easy. So let's talk some clean charts here. So we have this low here, we have this high. So this is uptrend, medium term from here to here, this uptrend. Now, working with this trend, you can see that this is actually a pullback that is bound to happen somewhere around here. Do you understand? The pullback has to come into this particular bar right here because this was where the market got this momentum to rally all the way up. You can see we come with 2x extremely bullish. However, the following week was bearish, and then it says 7 slow down around this bar right here. So we could even see a pullback, a dip into this point here before actually continue blowing through the sky. And then obviously once we clear this level, we have a prime target once again, which is right around 1.22176 if and only this bar gets cleared. All right, now if you look at things closely, let's see if you can connect some trend lines here to work with. Now, once again, if you're drawing your trend lines, I beg you guys and I urge you guys to draw your trend lines on the week of the outermost part of the trend of the candles. All right, so this is at the actual week. Do not make the mistake of coming on here to draw your trend line like this. It doesn't work that way. You have to draw it at the outermost, and it also has to be at the week. So you can see that we have the first touch here, we have the second touch, and we are actually awaiting a third touch of the trend line, which usually. So there's a saying in FX in trading that the third touch of the trend line usually does the trick. It usually breaks the camel's back. So as things stand here, we need to see this guy pull deep into this 1.090 region, and then once it's also done, then we can actually come on to blow things to the roof. And then, obviously hit that first level target, which is 1.12758. And then once it's said and done here, if you can clear this bar here, which I do believe we will, we have space all the way to 1.22000 region right about there. So that's just that for the euro dollar in a nutshell. All right, guys. So the following pair now on our list would be the pound sterling. All right. So this also has, like I said, a similar setup to the euro dollar, where it's actually printing series of higher highs and higher lows. This is in a steep uptrend. All right. So this is actually printing some new highs and some new lows every single time, every single week. However, if you look closely here, we've actually come into creating an inverse head and shoulders pattern. So this is the head, shoulder, and herein lies the neckline. Herein lies the neckline. Why? Because this is the neckline. This is the head, shoulder pattern. This is the neckline. That is the actual top of this chart pattern here before the breakout. So this is what happens. And then this was the first pullback here, which is often insignificant as compared to the second and the third pullback even. Right? So this is how things look for the pound sterling in a nutshell. Let me just get rid of this green bar right here. I was actually creating one or two things here. So looking closely here, this is what we have to work with. Okay, so this is our inverse illustrated pattern neckline. Okay, so what we need to see now, we have seen again similar thing happen on the euro dollar here. We'll have the inverse illustrated pattern, then we have the neckline demand created, then rally from here. The market is set to come in and test this level, properly. And if you're actually creating with your Fibonacci tool here, you can see like that from swing low to swing high, we have something very decent to work with here. From swing low all the way to swing high here, you can see how things look. We need to see this guy collapse further into this 1.28 region right here before we actually start beginning to buy this guy once again to the upside. Now, this also coincides with the pullback point that I've been talking about for a very, very long time. Now, let's see how things look from this other time frame here. So you can see that every single thing that puts this guy in a downtrend is actually taken out. We're talking about chart patterns, we're talking about trend lines here. Everything's out of the way. In fact, we did even have a downtrend line breakout and retest here. So this guy is actually pointing bullish as we speak. All right. So one thing that we also need to look out for is from this bottom here, we can actually draw and plot our trend lines here to see how things look. So you can see that we've had a first touch, second touch. Okay, so we are actually awaiting a third touch, possible third touch somewhere around here. Then we also need to take into consideration the demand levels created. Yeah, so the market keeps creating new demand levels, and then one thing that you also need to understand is that whilst creating demand levels, the market also go ahead and create liquidity zones. All right. Now, why are they called liquidity zones? Those are called liquidity zones because the market most times will definitely come in there and take your stops, take your stop losses out, and then before they actually go in your direction. So as things look, we have a beautiful option here. You can see that after an impulsive move, a rally, take out the high, then comes back to test that demand level, which is somewhere around here again. Takes out this high, it has to come back and test this demand level before actually go higher. It's simple, guys. How do you know how the market will most likely pull back? Just study the recent pullbacks, and you know that when this guy is coming for the pullback, he has to come in deeper to this 1.28 region right here. I know that some of you guys may actually get convinced to actually start looking for buying opportunities somewhere around here. That is not something that I would do, considering the fact that we are so close to this bar right here. Now, mind you, we have not successfully broken out of this yellow bar right here. So I urge you guys to be a bit careful when you're entering your trades. So allow this guy, because we are too close to this bar. We are way too close to this bar. This could even end up being a double top. Do you understand? This is the first top collapse, second top. This could easily be a double top and then drop further. Right? A double top is not only when the market does this. All right, the market could sometimes, you see, it has equal highs. Now, it doesn't always happen that way. Sometimes the market will come in here, okay, and give you something like this. This is still a double top. Do you understand? So you need to be mindful of every single level that you place in between minor levels here. For me, I would advise you guys to wait for the market to actually pull back deeper into this point, which is around 1.2800 region. Once again, the UK government comes in and then to cut their interest rate, this will actually set this pound sterling collapsing further around 1.28 region. Once it's said and done. And then, however, should we actually continue higher, which I sincerely doubt, but should we actually continue higher from here, we will definitely see the market pull back into this bar right here, which is around 1.33223 region, and then we can actually go ahead to look for buying opportunities right after the big test is confirmed and checked. However, as things stand, this is an impulsive move. Once again, this is an impulsive move. We've not even gotten half of the entire pullback yet. So you need to chill when you're actually looking to buy these pairs. All right. So be careful. There's no point rushing. You can see that when we came on here, created a demand, took out the high, came back to test that demand level before actually continuing higher. So this is most likely what's going to happen here. How do you know how the market will pull back? You need to go back and study the past pullbacks. Okay, once you can study how this market pulled back recently, you can actually look at this plan and be like, okay, fine, this guy is going to pull back exact same way this guy pulled back. Now, this might be giving us a chart pattern here. It didn't give us a chart pattern here. However, you saw a very engulfing candle, which was a daily time frame engulfing candle here, and then send this guy back down. So just look out for these things when you're actually taking your trades. All right. So the next pair on my list will be the Aussie dollar. So the Aussie dollar also remains a pair of keen interest from my end, because I do believe that this guy is rallying all the way to 0.700 region, which is always where I have been hinting at. However, as things look here, we do have levels to watch out for, the levels to work with. All right, so we have several levels here that the market needs to pull back into and take out this liquidity zone here before I actually start looking for buying opportunities. All right, we are tapped at supply. we are stuck at supply levels here, which is something that you also need to take into consideration. Now let's go on weekly time frame and see how things look. So from a weekly time frame perspective, this is how things look here. This demand level is yet to be tested. It's yet to be tested. It came on here and then just created a new demand level and then just rally from there. However, this is an inverse head and shoulders pattern. The market needs to come in and test this yellow bar right here, which is also equal to the bottom or the base of the left shoulder. Once this is done here, we can now actually start looking for buying opportunities. Now the market is sitting right at very major supply level here. This is a major level. This level has held for years. Do you understand me? It has held for years. So the market will most likely reverse from here and then come in deeper for a pullback. Once it's set and done, you can actually come here to blow things through the roof and always aim at a prime target, which is 0.7000 region, which is around a figure right there. All right. The next pair now is let's talk gold. All right. So for gold has hit our prime target. Actually, gold has gone ahead to hit our $2,600 per ounce level that we actually had on gold. All right. So now as things stand here, what I'm actually waiting for on gold is very simple. I just need a decent pullback to work with. All right. So for gold, the way you trade gold is not the way you trade every other pair. You feel me? The analysis is the same, but the way gold moves is quite different. Do you understand? So what we need to see on gold now is very simple. We have two levels here waiting, right? So we have two levels here to work with. We have this first level, demand level that was created here, which was like a double bottom breakout and then retest somewhere around here like this. Okay, so it did that and then it went ahead to create. Now I need you guys to understand that the market creates zones, not lines. So when you're plotting your zones, do not make your level so thin that you now expect that the market has to come in and test it. No, it is a zone, it is an area, right? So now the market has to come into the demand level, which is right about $2,480 per ounce region for gold. Now once it's said and done here, we should actually rally further into the regions of $3,000 per ounce for gold. All right, so I see nothing wrong with this, but first things first, we need to see gold deep lower into this point here, into this most recent demand level, which is somewhere around here. Actually, let me just go ahead and do it this way. Hold on, guys. So this is what the demand level looks like for gold here. So before we actually do anything, we need to see the market come in here and balance out properly. Okay, you need to come in here and balance out properly. Deep lower here, balance out properly before actually coming to blow things through the roof for gold. It's very easy. Prime target remains $2,600 per ounce. And once it's clear here, we have space. Ladies and gentlemen, we have space. Gold still keeps making new highs every single time. So your best bet is to actually hop on the trend and ride it to the end. All right. So next pair now should be, let's talk Nasdaq. So Nasdaq isn't really presenting any decent opportunities so far, but I still have my eyes on Nasdaq. I still have my eyes on Nasdaq. We haven't seen any decent breakouts here. If you can see Nasdaq break above, because this is a high low from here, best believe. So if you can see Nasdaq break above 20,000 basis point, then we can actually see this guy rally into 22,800 basis points for Nasdaq. All right, so we have to keep looking at this guy closely to see how things unfold. Mind you, if we can get a decent break out of this bar right here, I kid you, we would easily rally into $22,800 per ounce because basis point, because this is also even a breakout. Do you understand? So this is equally a breakout. So this is a breakout and retest. However, we don't trade off of trend line break and retest. We trade with major and minor levels. Mind you, major and minor levels. So we need to see markets break above here, retest, and we actually do things through the roof all the way to $22,800, 22,800 basis point. I beg your pardon. For BTC, so BTC also has been very confused per se. So I was actually calling BTC to the downside for a while now, and let's just do like a new recap on how things unfolded on BTC. So for BTC here, it keeps stalling around this region. It keeps stalling around this region here. However, we have deep demand levels somewhere around here. We have some major demand levels somewhere around here, and the reason as to why BTC spiked up was because the Fed cut their interest rates. Obviously, if they cut their interest rates and dollar dips, this guy is going to rally. However, as things look, this pair is still looking like it wants to dip lower into this point here. This is still a major demand level, and I kid you not, this is something that can be done within a week or two, right? However, so the market is just coming into this supply level here. Do you get? Now, I'm only bullish on BTC if we can clear this $73,000 per coin level. This has been a major obstacle for this pair going higher. However, one thing that I've actually come to notice is that whenever the market creates a new supply level, the market tends to go there and test it before continuing lower. So what I see this guy doing here is coming on here to this region around here, which is right about $65,000 per coin region. All right, so that's why I see $65,000 per coin region. Now, if we cannot break above this level, we are definitely dropping all the way to 44K per coin. I am still calling BTC to the downside, provided we remain underneath this yellow bar right here. And if anything takes us above this yellow bar at $72,000 per coin, then I can now come here and start, looking for some more bullish setups to trade. However, as things stand, this pair is actually still bearish as far as I'm concerned, because we have a demand level somewhere around here. Now, only on 2 occasions, right? On 2 conditions. If the market clears $5,000 per coin and clears $72,000 per coin, then we have space all the way to the upside. In fact, this could pretty much rally into 100K per coin as early as Q1 2025, right? But as things look here, we have to trade with what we see. So this is, once again, this is looking like a double top here. And how do you trade a double top? Is very, very easy. Okay, in this case, very, very easy. Now, for those of you guys who are actually waiting to short this guy here, what you need to do is wait for a 4-hour candle break and close. Let's see if I can have like a tighter entry for you guys. Let's see how things look on 4-hour time frame. So this is BTC 4-hour time frame in a nutshell. So what you need to see, wait for the market to break out of this trend line here on the 4-hour time frame. Once you see a decent 4-hour break and close here, always make your entries, and stops have to come above structure, and always the target remains $44,000 per coin for BTC. All right. Now, on the other hand, if you do see a break above here and the break above $72,000 per coin, all you need to do is wait for a pullback, which I'll obviously come on here to let you guys know when that is ready to play out. All right. So the next pair now would be GBPUSD is still bullish, just playing around at the moment. Nothing really serious from this pairs. Nothing really serious from this pairs as far as I'm concerned. The market is still sitting at a major deciding level, which is the demand level here. So we need to give GBPUSD another week or 2 to decide. Now, I also need you guys to see that we had a double top here. So the market is just sitting at a very, 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 very very important level right here. So we are still not decisive as far as this pair is concerned. We will be bullish if we see a decent break above 109.183, or a break below this bar here will be a very decent point to short this guy all the way back down to recent demand levels. However, as things stand, this pair is in between 2 major levels, and I really do not like trading that way, because this is a range. The next pair now on my list will be EURUSD. So EURUSD will be head to the downside if I'm not mistaken. I'm actually going to be shorting this guy once I see this pair head higher into this 164 region here. Although this is looking like a weekly bullish engulfing candle, but what we need to also understand is that if the euro is weakening, this guy is going to drop as well. All right. So long story short, what we need to see is this guy, coming to this yellow bar, this bar right here. Let me just make this a bar. Now, mind you guys, once again, this is not supposed to be a line. Okay, make it a bar, a full-blown bar, guys. So this is meant to come in here. Okay, give me a sec. Hold on a sec, guys. Try to adjust this, guys. Okay, so this is a zone, not one particular spot, right? This is a zone. So what we need to see is market needs to come into this bar right here, right around this 1363 region, and test it properly. Then we now come on and hit things lower on the EURUSD. All right, so I'm bearish on this pair, provided that we stay below this 163 high. If you can break above this 163 high, then we have space all the way to 172, 175.2 for now. However, I don't see this happening at the moment. Especially due to the fact that the ECB could actually come to cut their interest rates this month or later on, this year. Let's talk the pound JPY. So also the same thing, yeah. So all of these pairs have been blowing through the roof, headed higher. However, as things stand here, as far as this market remains below this yellow bar right here, I'm very, very cautiously bullish on this guy, because we could even reverse from here, especially as the pound sterling is about to reverse. We could definitely reverse from here to head lower. All right. So I see no reason as to why we shouldn't actually be careful with these pairs whilst trading them. And then also, guys, there's no rush with these pairs, especially the JPY pairs. There's no rush with them. How things unfold this Q4, I will definitely be here to let you guys know what going. So for the Aussie JPY, so since the AUDUSD is gonna pull back anyway, once again, you have to be very, very careful with these pairs. Now, also, if you're looking to go bullish on any of these pairs, one thing that you also need to take into consideration is this trend line here. Okay, one trend line, and then also this supply level. The market has to come in and take out this supply level so that you don't end up being a casualty. The market has to come back and take out this level here. Then you can start looking for buys to this 109.375. However, as things stand, I don't see that happening. All right, so let's talk silver. So for silver has to give me a pullback. Silver has to give me a pullback here. Forget about this liquidity pattern here. Silver has to come and give me a pullback into this region here. Now, once this is all said and done, I'll be here to let you guys know what band and then when to actually hop on the trade. You can see how the market pulled back. Impulsive move, demand was created here. You pull back to that demand level. Impulsive move, demand was created here. He has to pull back into this demand level before I actually continue, running higher. My current target for silver remains $35 per ounce for silver. I see no reason as to why this shouldn't happen here. It is very easy, very, very straightforward to the points. We have something to work with here. This was the first breakout we had. So this is the market pullback into this point here. So once this pullback is all said and done, you see it matches. It will be a very, very decent trade for us. It will be easier for us to trade this pair once we see a decent pullback. All right. So I will just wait for silver to do whatever thing it has to do. And I see this as a liquidity. I see this point as a liquidity, and I urge you guys not to fall for it. Allow the market pull back deeply, and then let the market come in and test this level at $29 per ounce. Because this could pretty much easily be again similar to the euro dollar, the pound dollar. This could pretty much easily end up being a double top. So allow the market pull back into this point here before I actually start looking for buying opportunities all the way to $35 per ounce. Guys, I kid you not, there's so much money to be made this year. You don't have to hurry, you don't have to rush yourself at all. So for S&P 500 here, nothing much on this guy, nothing really enticing so far. Just playing around. For S&P, if we are to take any trading opportunities on S&P, it is very, very easy. What we need to see is for the market to keep rallying. Now, mind you, my prime target for S&P remains at 6,400 basis points for S&P. All right. However, the market could pretty much easily reverse from here because this is also still playing around supply levels. Now, before you actually go ahead to start looking for buying opportunities, allow the market to rally a bit, let it go a bit, and then let it pull back to this particular point, and then you can start buying this guy. My prime target remains at 6,400 basis points. Now, how I came about this particular targets here, I urge you guys to go back and watch my previous videos here. I broke down every single thing in depth. Let's see. Now, by the way, if you watch up to this point, I want to say that you're getting value from this, and I urge you guys to click that subscribe button, leave a like and comment, and also be sure to share this video across every social media platform, and let's get the visibility that we actually deserve. Right. So I think that's all. When it comes to FX. I think that is all. I haven't seen any other decent pair line up in the league. Once again, if I see anything that looks juicy, I'll be here. So let's talk crude oil. So crude oil is our final pair. Yeah? So crude oil, on the other hand, has some very, very juicy opportunities. Guys, we've been shorting crude oil for the longest of time. We've bearish on this guy right from this point. So we short this guy, and how things looking now, it is looking very bearish for crude oil as we speak, because we have been in a very decent downtrend. So this is a high, it's a lower high, lower low, lower high, lower low, lower high, lower low, lower high. Here we are definitely coming to put at least an equal low, or if things get worse, in a lower low from here. However, before these things materialize, we need to see crude oil come into this some $4 per barrel region here. So once this is also done, some $4 per barrel here, it comes in here and then actually come and blow this guy back down, right? So this is the bone of contention as far as crude oil is concerned. Now, if you're the type that wants to trade oil, I urge you guys to wait patiently for oil to get to $74 per barrel. Once that is said and done, I'll be here because why I love to trade this pair. I'll be here to let you guys know when the market is ready to start printing bands and box. All right. So thank you so much for listening to the end of this video. Once again, my name is Desmond Samuel. Make sure you leave a like and comment and turn on the post notification and also subscribe so that by the time all these pairs line up, you do not miss out any pair. And then one more thing, guys. I urge you guys to always come back and watch these videos because you're going to learn a lot by repeating every single video I've made. And then also, my course comes out this Q4 where we have the forex trading course, we have the crypto course, we have every single thing intact. Then we'll teach you how to trade the financial markets and even Binance futures, Bybit futures. Everything is inbuilt, guys. Do not worry, it will be packed, it will be loaded for you guys, and the fee will be very, very reasonable, especially from Nigerian traders, and then also those of you guys in the diaspora. Every single thing will be done easy and pleasing, very accessible, and then also you also get like a special Telegram community where you come and have like a personal, interaction with every single trading student that I've actually mentored in this game. All right, so thank you so much for taking you to the end. Once again, my name is Desmond Samuel, and if you have any inquiries, feel free to reach out to me via email, which is in the description below. All right, so peace out and speak to you guys next time.